Good evening, our respected President Sir, Director Sir, Principal Sir, HOD Sir, Dean Sir, and all our family members of IMUM and our dear students. It is the great honor and pleasure for me to host the online session. Myself, Shogato Ghosh, and Professor Shauhardo Nandi will conduct the entire session. Today's the event will be the career in finance and portfolio management for the chartered market technicians, organized by IM Management Department in collaboration with the CMT Association. The speakers of the event are Mr. Shumay Goswami and Mr. Joel Pineco, the head of CMT Association India. The Shumay Goswami completed his graduation in mechanical engineering from Jadavpur University, Kolkata, and he has been associated with the financial services industry since 2007. He is an avid believer of evidence-based technical analysis and run his own volatility breakout models in Nifty, stocks, Bitcoin, crude oil in the prop account of his firm. The Shumai is also passionate the teacher of technical analysis and enjoys sharing his knowledge while the learning something new from everyone. And Mr. Joel Pineco, the Indian operations of the CMT Association. He spent over 19 years across the education technology industries, including the commercial educations. He's completed the training in K2, the continuing the professional educations. He has led 3 Tech Starts UPS. Before this, Joel was the CEO of Jaya Learning Labs and Educational Technology, the social enterprise. He's also built a Tech A classes, the foundations of the Section 8 NGO in the Indian first crowdfunding platform for the School of Teachers from 2010 to 2017. The Joel also the run and the Bloomberg LPS educational strategy across the Asia Pacific, the supporting the stock universities and business school. So I will hand over to Mr. Shumay Goswami. He will start the sessions. Over to you, Shumay.
Thank you, Shogotoda. Thank you very much. And let us start the session. Myself, Shumoy. So today's session is on career prospects in finance and portfolio management for the CMT charter holders. The first thing that comes to mind is what is CMT, what is the charter all about. Later on, we will take care of that. My co-presenter Joel Panicott will explain all these things. Let us start by saying just that CMT stands for Chartered Market Technician, and we are avid believer in the technical analysis. Now comes the question, what is technical analysis and how can it help us in our career? So before that, let us start with the definition and the working procedure of technical analysis. So first of all, I'm going to define what is technical analysis and how do we explain the market movement, how do we try to get profit from the market with an analogy. I get an analogy from a branch of engineering. And when I was a student of engineer, our professor has gave us the example of steam engine. And later on, I found that this has a lot of similarity with our market and our analysis procedure. What I want to say is that James Watt invented steam engine in 1763 at the dawn of industrial revolution, and he changed the history of mankind forever. Uh, though the ideal Rankine cycle, it has an efficiency of 63%, but in real life, steam engine has a very small efficiency of 40%, something like that, less than 40%. What it means is that a steam engine converts chemical energy that is stored in coal to mechanical energy, mechanical work. It gives us mechanical work. If you give 100 kilojoule of energy from coal to the steam engine, it will give you 40 kilojoule of work. So you give 100, you get 40 out of it. So that is efficiency of 40%. Now, why I'm telling you this is that there is some similarity between the market we approach it and these kind of things. We were told when we were studying engineering that if we could improve the design of steam engine by merely 1% or 2%, the rewards will be enormous in both way, both in cash and fame. Okay, so that means that is not very easy task, but here it is. What is the similarity with this to the market and the way we analyze the market? My point is that market has its own efficiency in the long term. You invest your money and time, and it will reward you with a return for your patience and conviction. So how much is the long-term return? uh, if I buy the market and hold? See, markets run in bull phases and in bear phases. But generally, mutual fund investors or mutual fund managers tell us that you cannot time the market. So stay invested in the market for a long enough period of time so that you get a good return. So first of all, let us know what is the return of the market. I'm talking about the Indian market. We have a record since 1995 of Nifty. And at the end of 1995, Nifty was at 900 levels. This week, Nifty are closing almost at the doorstep of 15,000. So we calculate a CAGR, compounded annual growth rate, and we found that 11.9%, that is nearly 12%, is the compounded return of Nifty. So if someone buys Nifty or the entire stock market, the Indian stock market back in 1995 or somewhere in between, in 2000 or 2005 or 2007, wherever he has invested, irrespective of the rise and fall of the market, he is getting nearly 12%. So this is the picture of the Indian equity market that is represented by Nifty. And you can see how markets have a general upward bias. Most of the equity markets have a general upward bias. There are lots of reasons. One reason being inflation. Uh, So you see this Indian equities that is represented by Nifty 50 index. It has given us a compounded annual return of 11.9% since 1995. And to get this return, you don't have to do any analysis, or you don't have to show any smartness. You just have to stay invested through its bull phase and the bear phase. But to get better returns than this, I'm saying by no means this is a small return, okay? Because our inflation is approximately average 6.5%. So you are getting almost double of the inflation. So by no means it is a small return, but our objective is to get better returns. Now, to get better returns, you need to have an entry and exit strategy. You need to know when to buy and when to sell. You need to be able to buy before the bull market begins, and you need to be able to sell when the bull market ends and the bear market starts. That is all about analysis. That is all about technical analysis that we do. So we try to outperform the market, and to get a better return, we do all our analysis. What is the now all that I want to say is that 11.9% return may not seem strong, but if we look at the um, lifetime CAGR of Warren Buffett, arguably the greatest investor on earth, his annualized CAGR is mere 19.1%. So with 19.1% annualized return, he has compounded it over many years through all the bull and bear cycles. And so he has become the greatest investor on earth. And there are many examples. Gene Simons is another name. So what I want to say is that this is the analogy between the steam engine and our stock market. If we can try to design a better engine, or we can try to enter our market in a better way by doing some technical analysis here and there, so we can try to fill up the gap between these huge returns and the modest return that the market gives us. And that is all about technical analysis. We try to uh, time the market. We try to enter before a move begins. We try to exit when the move ends. Not always we are successful, but most of the time we try to manage the risk and get a better return. So this is our means of doing that. And we can, whatever we can uh, tell the students is that if you can perform, if you can outperform the market, just like the steam engine, if you can design a steam engine which is 1% better than the previous model, just like that, if you can design a trading system or a trading model or an investment approach that gives a 2 or 3% higher return or 4% higher return than the index, then that is a winner. That is a winner for the lifetime. Your clients and people will come and beg to you to manage their money, and they will give you their money at your own term, right? So that is the greatest reward that we can reap. And technical analysis is just a mean. There are other means as well. Here we will be talking about that. But this is what we do. We try to outperform the market and get a better return than the market by technical analysis. So what is technical analysis? Technical analysis in its basic form is nothing but the study of prices. Prices, those we see in the market. Prices in a freely traded markets. What is our intention? We just try to make profitable trading or investment decisions. So technical analysis is the study of prices. We are not concerned with whatever the company is doing, its profitability, its P ratios, and all those fundamental things. We are interested in the prices. We are interested in many other things. Later on, I am coming to that. But this is the basic definition. So it is a study of prices in a freely traded markets. That is technical analysis. Uh, Students are much more aware with the valuation based models that we call fundamental analysis. So first of all, I need to show some advantages of technical analysis over fundamental analysis. And that is why we are much more interested in technical analysis, because technical analysis gives a better means of risk management. So to the left, I'm showing the characteristics of valuation-based models, which is fundamental analysis. And to the right, I'm showing how technical analysts approach the market and they try to manage the risk. Valuation-based models try to find the true value of a stock of a company. If the particular valuation of a stock becomes 80 and the company and the stock is actually trading at 100, then fundamental analysts will say that, hold, do not buy that stock. It is overpriced, right? So valuation based models assume markets are rational. This is important. They believe markets are rational and true values will be reflected in prices in the long term, which is true, because true values are reflected in prices in the long term. That is undoubtedly true. But in reality, market behaves like a maniac, like a beast. And the objective of technical analysis is to identify the trend. So technical analysts never tries to justify the price, justify the valuation. It just tries to identify the trend, and it takes position to in the direction of the trend. Say for example, let us talk about the current market condition. Our Indian market as of now has closed almost at its lifetime high. It is at its lifetime high, and valuations are pretty costly. No fundamental analysts in my know that they're very bullish about the market, because they can see that the trailing 12-month uh, price earning ratio is at a historic high level. They can see that it is 38, right? Back in 2007, when market fell, P ratio was at around 28, right? Now the P ratio, they are saying that the P ratio is at 38. So how do they find the proper value here? They cannot find the proper value here. Market is as of now is moving like a beast, like an animal. In past 1 week, market has given an enormous rise after the budget, especially. So there is no value as we speak fundamentally. But as we speak it technically, then we can see the trend properly, right? The trend is upward, and in an upward, it is our philosophy to trade in the direction of the trend. Do not question the trend. Just go in the direction of the trend and manage your risk. Yes, it is true, market will top out somewhere, but we do not know where the top will come. So keep going. So that is how technical analysis is done. Another difference between technical and fundamental analysis is that it is on risk management. So diversification is a very important tool, and it reduces risk and return both, but it reduces risk more than it reduces the return up to a certain level of diversification. So for fundamental analyst, diversification is the only risk management tool. But for technical analysis, diversification is a tool, but also there is another important tool, which is called stop loss. We, we accept that if we buy something in our hope that prices will keep on rising, suppose our analysis has given us that prices might be rising, we have bought on that analysis, but say prices are not rising, prices are falling, right? So at certain point of time, we will accept that our analysis is wrong, or maybe our analysis was right, but this time it has not worked. So we accept our loss and we come out of the market by protecting the capital. So technical analyst knows where to accept the loss, where to accept the mistake. So that is another risk management tool in the arsenal of a technical analyst. And last but not the least is that a fundamental analyst is he analyzes the corporate balance sheets, but it's very challenging to perform fundamental analysis to alternate asset classes. Like there are commodities like gold, crude, silver. There are cryptocurrencies like Bitcoin, Ethereum. So it is very difficult to perform fundamental analysis to these alternate asset classes, because we do not know what is the true valuation of gold, right? Nobody knows. We do not know what is the true valuation of, say, Bitcoin, right? Nobody knows. But if the market is freely traded market, means if everyone is free to buy and sell whatever quantity they want, then technical analysis approach is universally applicable to all time frames and to all asset classes, be it gold, be it crude oil, because prices move in trend, and our objective is to just identify the trend and to take position in the trend. We do not care whether it is Bitcoin, whether it is gold or silver or Nifty or anything else. So that is another advantage of technical analysis over traditional fundamental analysis. So let's move on. There are 5 basic assumptions of technical analysis, and these assumptions are as follows. First is that stock prices are determined solely by the interaction of demand and supply. If there is greater demand, then prices will rise. If there is greater supply than the demand, then prices will fall. That is the basic reason of uptrend and downtrend. Nothing else matters. Valuation, all other things, what the other analysts are saying, uh, no, nothing matters. Only what matters is supply and demand. Second, stock prices tend to move in trends. This is a bit contentious because some professors tend to believe that trends are random in nature, but modern analysis of behavioral finance has proved it beyond any doubt that prices do move in trends. If there is opportunity, then we will try to explain why that is the case. But prices do move in trends. And what is trends? Trends are sustained movement in one direction, right? Long enough movement. Some trends last for years or even decades, right? So if we can identify the trends, then there is enough opportunity to make profit from the trend. And that is the basic objective of technical analysis. Third, shifts in demand and supply cause reversal in trend. If demand is higher, but then suddenly supply becomes higher, then uptrend is turned into a downtrend, right? And in our chart, we can see that, right? There are certain characteristics that happen in prices, and we can identify those characteristics. And by identification of those characteristics, we can take our position accordingly. There is so trend reversal is caused by shifts in supply and demand. Fourth is that shifts in demand and supply can be detected in charts that I told just now, right? And chart patterns tend to repeat themselves. That is again explained by psychological behaviors or behavioral finance. But this has also been proved beyond any doubt that chart patterns tend to repeat themselves. Whatever has happened in the past will also happen in future, but not exactly in the same way, but in general that will happen in the future. To us, it does not make much of difference. Uptrends are converted into downtrends, and downtrends are again turned into uptrends. That is the two scenarios possible. So let's move on to the next part, components of technical analysis. What are the components of technical analysis? What are our inputs? What data do we need to analyze prices? We analyze prices on quite a few parameters. Most important is the price itself, which is the open, high, low, close, etc. Everyday prices, open, they close, they give us a highest price of the day, they give us the lowest value of the day. Those are very important for us. Volume is the second important parameter. How much quantity is being traded, right? If it is a very thinly traded stock, then we do not give its trend much importance. But if it is a very liquid stock, means there is large number of volumes, then the trends are much more reliable, right? We can quantify all these approaches, but these are just the parameters. Time is very important parameter in our analysis. Longer is the time frame, more robust are the signals, and trends are more stronger in longer time frames, right? The fourth important parameter is open interest. It is applicable to futures market. I'm just giving you the name. I'm not explaining it right now. The fifth is market breadth, means how many shares are rising and how many shares are falling in a particular day. There are other measurements of market breadth as well, but this market breadth gives us a direction, gives us a sense of direction of the trend that is likely to come. Is the uptrend very healthy? Is more number of stocks rising than more number of stocks falling? Then the uptrend is healthy. We can measure this, and we can create workable trading strategies on this. And the last but not least is the sentiment indicators. Sentiment plays a very important parameter, very important role in a technical analysis and direction of the market. And there are certain parameters we can quantify sentiments as well. A few of them are put to call ratio, then volatility index. One is a commitment of traders report, the COT report that is published in US. So all these are sentiment indicators. So these are the variables, or these are the parameters based on which we can create our trading strategy from these parameters. So these are all inputs for a technical analyst. Uh, Technical analysis is all about charts, and on the charts we basically plot prices. These are just simple candlesticks or bar charts. Those are plotted on the charts, and something like this comes up when we plot every day's price, open, high, low, close. That looks something like this. This is a typical chart, and this is a chart of Nifty. It back in September 2020. So this is how chart looks like, but that is not the only way of looking at the charts. There are many other ways to look at the same chart. This is the same chart presented in a different manner. This is called a volatility breakout chart or point and figure chart. There are many kinds of charts, just not the candlesticks and the bar charts. So this is another type of chart, and we can use many types of charts to derive what is the trend of the market and in which direction should we trade, or what is the stock that we want to select, and all those things. Technical analysis is universal in nature. What do I mean by universal in nature, right? I mean, technical analysis, you can apply technical analysis uh, independent of location. That means if technical analysis is good enough in New York, it will be equally applicable in India. It will be equally applicable in Tokyo, in Moscow, in anywhere else in the world, right? Because technical principles of technical analysis are founded on human psychology, and human psychology, especially human behavior. And people behave, especially when they are stressed. Financial decisions are mostly taken under stress, right? And when people work under stress, then they tend to show certain characteristic behavior. And when a crowd becomes under stress, then their behavior is predictable. Now, this is important, that behavior of one particular individual, how he will behave when he is under stress, that cannot be predicted. One particular individual's behavior cannot be predicted. But when there is a group of people, and that group of people is working in stress or working under emotion, like what we see in a stadium, like, right, in a football stadium or cricket stadium, or what we see in a theater hall, or what we see during a riot, all people become crazy. So how they will behave, how a group of people or a crowd will behave under emotional stress, that is predictable, and that is the underlying strength, that technical analysis is universal across its location, across its period, periodicity, or asset classes, because the foundation stone of technical analysis is in behavioral finance, and that is why technical analysis is universal in nature. So what is the goal of technical analysis? uh, what does a technical analyst want to do or want to achieve? The most important part is, as I told you earlier, is he is wanting to find out what is the trend of the market, right? And if the trend is up, he will not question the uptrend. He will not look for valuation. The prices may be overvalued, but he will take a risk to the upside, and he will define his risk, right? If the trend is down, he will not try to say, okay, it is oversold, or the prices may rise, or whatever. He will take a sell position. He will bet in the direction of the trend to continue, right? And different trends are possible in different time frames. That is a uh, I don't want to stress it as of now. So let us say for now that bigger is the time frame, more robust is the trend, more reliable is the trend, and smaller is the time frame, uh, the trends are less reliable, right? So that is what I told you. Long-term trends are more robust than short-term trends. And in the first part of my presentation, what I showed that Nifty has given an 11% return in past 26 years. It has risen from 900 to 15,000. That is what a long-term secular uptrend means. But in between those long-term uptrends, some pullbacks or some big sell-offs do occur. That is how market runs, right? So, how trends are identified and how the reversal of trends are identified. That is the true essence of technical analysis. And I'm showing you a few examples. Basic examples are when prices keep on moving. The chart here you can see is that it is Moody's AAA yield chart. It is a real life chart, and this chart has a duration of nearly 40 years, right? This is to the left of the chart. You can see prices were rising for nearly 20 years. And when the rising were occurring, prices were making higher highs and higher lows. At the top, you can see that the higher highs and higher lows, the series of higher highs and higher lows are broken, and prices are breaking the lows. And after that, you can see prices are making lower highs and lower lows, or lower tops and lower lows. That is the characteristic of downtrend. So if we can identify the highs and lows and tops and bottoms, then we can identify the trend of the market. And this is the what I call the secular uptrend and the secular downtrend, right? So this is an example how long a particular trend runs. This particular trend, the uptrend, ran for nearly 20 years. Then the downtrend is also running for 20 years. So if we can identify the trend, there is enough opportunity to make some profit. So here is some real life example of how trend analysis is done in technical analysis. As I told you earlier, our primary job is to identify the tops and bottoms. There are many other approaches. Uh, one particular analyst may prefer some approaches, other will prefer other approaches. This is the basic approach, and everything starts from here. The Dow theory starts from here. Charles Dow's logic. Actually, he gave a theory some 120 years ago, and this is the continuation of that logic. Is that if prices are making consecutive higher throws, it is an uptrend. Throws means bottoms. If prices are making consecutive higher bottoms, it is an uptrend. So we just have to identify the bottoms or throws and see if they are they're being made consecutively higher. An uptrend is aborted when this series of higher throws ends. So in this diagram, you can see that at a particular point, the higher bottoms are broken. I have tried to show them on the charts. And when that occurs, that is a great probability that the uptrend is over. If we already are carrying a buy position, that is the time to exit, right? Our job as an analyst is to identify those levels. If we can do that, that is great. So an uptrend is aborted when this series of higher throws ends. Frequently, this occurs after a lower peak, as you can see in the diagram. So this is reversal of an uptrend. The opposite thing is also true. A downtrend, after being continued for several uh, time periods, say several days or several months or several weeks, when the tops are taken out, that is the end of the downtrend. So a downtrend is characterized by a series of lower peaks, right? Peaks means tops. The downtrend is aborted, means the downtrend is over when the series of lower peaks is terminated. This frequently occurs after a higher throws. Higher throws means after prices are making higher bottom, prices are taking out the previous tops. So that is a strong signal, not always that is a confirmation, but that is a strong signal that the previous downtrend is over. So there are many technology, many techniques, but this is just one of them to identify the trend. Uh, I have reached nearly the end of my presentation. Let me show you a few real life examples of how these principles are actually used in trading. One or two trades that I did in my previous company in Bitcoin. I particularly prefer this asset class because of its volatility. Where there is big volatility, there is big opportunity for making profits, and also there is big losses. So I just showed you how some major trend reversals have occurred in Bitcoin, and I have traded them myself. But this is the example of Bitcoin. This does not mean this particular logic is applicable only to Bitcoin. As I told you earlier, technical analysis is very universal in nature. You can apply it on any asset class which is freely traded. So in February 2020, almost 1 year ago, BTC topped out. It ended its primary uptrend. The previous uptrend was clear in the series of higher throws. As you can see to the left of my chart, that BTC was making higher throws. So that was the uptrend. When the series of higher throws broke, that was the end of the uptrend. Now, nobody can say after the end of the uptrend how low prices will go. Prediction is a different ballgame altogether. Just what we can say is that this uptrend no more exists. So once the bottom violation occurred in third week of February, the magnitude of the fall could have not been predicted, but the end of the uptrend was evident. That was the time to sell. So our primary objective when we start technical analysis is to identify the levels of buying and selling so that we can outperform the market. And this is just one of many examples of that. Let me show you one more example, which is a reversal of downtrend to the uptrend, and the same logic applies. The infamous bear market of Bitcoin in 2018 was characterized by a series of lower peaks. As you can see, forget about the name of the asset. It is a Bitcoin, but it could have been gold, it could have been crude oil, any other thing. There is a series of lower tops that I have shown in black, and the series of lower tops when ends and price goes above the previous top, there is a high probability that the downtrend is ending. So the series of lower peaks ended in early January 2019. My price is going above the last lower peak, and that was the moment to buy. So as a technical analyst, our primary objective is to take these buying and selling decisions. Not always we will be right. Many a times after we buy, prices will come down. After we sell, prices will go up. So we use our risk management principles pretty strongly and try to come out with a small loss so that we can take another trade, another trade, another trade. So after a series of trades, if our principles are good enough, then we will be at a net profit. And that is what matters the most. So with this, I conclude my presentation, and I give it back to Shogotoda. And so Shogotoda, are you there?
Yes.
Okay. So that is what I wanted to show.
Okay. Thank you, Sumay. Do you have any question about to asking to Mr. Goswami? Then they can ask to open to
Sure.
us.
Right, Professor Gautam, will you be share? Can I share my screen now?
Yes. Actually, there is some student maybe ask some question. That is in to Mr. Shumay.
Yes, sure. Your audio is very poor, but okay, I can hear you still.
Is anyone students to ask to Mr. Goswami to any question about this? Okay, I hope no one wanted. Hello. Okay. Now, okay. Uh, Joel, you can take your presentation.
Thank you, Professor Shagato.
Yes, yes, you can.
Are you able to hear me? Is the audio coming through clearly?
Yes, yes.
Great. So if I could just share my screen, I'll take off from exactly where Shomai stopped. If you, sir, if you could have the contact, the control of the screen.
Yes, sir. You can try to share your screen.
Yeah,
Yeah, I'm trying it, but I'm still not able to. It says you cannot share your screen while the other participant is.
Yeah, now you can try because that shares.
Now I
Yeah,
can.
I have stopped.
Yep.
Perfect. Is my screen visible to you now?
Yes, sir.
Excellent. So, anyways, thank you so much for being here. Thank you to the students, faculty members, etc. Tumay, thank you so much once again. A wonderful presentation. For me, it's always a pleasure to listen to you speak, especially about technical analysis. With the passion that you talk about it, and I hope that future generations pick that up from you. What I want to kind of take forward in this session is Shumai outlined what is technical analysis, and that is the discipline, the body that the CMT Association is the primary credentialing institution for this body of knowledge. But you might want to understand where exactly are these used and what is this body of knowledge. So Shumai started off with just an introduction to what technical analysis is, what are its core principles, what are its core assumptions. Now we'll dive deeper into what more does this body of knowledge contain, and with that in mind, what more can you learn in this space? And after that, we look at who should be doing this learning. To whom is this body of knowledge important? And this is where, to Professor Shata's kind of request that he had made to us, this is where your career decisions come in. And for all of you whom I'm assuming are interested in a career in finance, understanding exactly where this body of knowledge fits and where this skill set is used is very, very important, right? So with that in mind, the entire body of knowledge of the CMD Association, or you could call it the syllabus of the CMD program, is what you are looking at your screen right now. So what you should know is that this is the gold standard of technical analysis around the world. There are more than 3,000 professionals around the world who bear the CMD charter. There are three levels of exams which you'll have seen here. The first one is an introduction. It's more definitional in nature. It's something that anyone who wants to transition into a career that leverages technical analysis would start with. So the basics of what are the concepts, where are they possibly used, what are kind of just the introductory pieces to it. Because we find that a lot of people want to make their careers in the world of finance, and within specifically the world of finance, within what we call the front office roles. So those are roles that either face the markets directly, like Shumois does, or faces clients directly and engages with them about the markets. Now, this can be at an institutional level, where let's say uh, a sales trader from a broking house engages with a dealer from an investment management company, say a mutual fund, and they have this conversation about what is going on in the markets. And so the person who is representing their firm needs to understand and talk meaningfully about the markets as they provide a service. In fact, for you young people and your parents as well, if you have investment advisors who come and talk to your parents about where they should invest their hard-earned earnings, you want them to be able to understand and meaningfully protect your parents from the risks of the market. Every ad you must have heard says XYZ is subject to market risk. So what does that mean? So folks who understand technical analysis are able to capture, quantify, and deal with market risk. And that is really one of the most important areas or the reasons why technical analysis has always been around in terms with professional market participants. So I'll tell you a bit more about that as we go on. But just so you understand these three levels, the initial is definition, what are the concepts, the second level is application, and the third is integration. As the financial markets evolve, you are seeing not only traditional methods of technical analysis that are what we call discretionary technical analysis tools, where you analyze an entity or a stock at a time, and you try to understand whether you want to enter or exit a trade with that stock. But also you have, with the emergence of computing power nowadays, I mean, there was a time a computer filled an entire room, and now a computer sits safely inside your pocket. And with this kind of computing power, there is a much greater ability to crunch data. And technical analysis sits at the heart of quantitative systems and algorithmic trading around the world. So, understanding the basis of technicals also means that you're able to build careers in the more modern spaces of the more modern interpretations of the financial markets. Um, so, with that in mind, just a quick understanding. So, these are some of the topics and subject matters that are covered within the CMT body of knowledge. And the body of knowledge typically is tested across these three levels. This is just a quick sense of what it takes to prepare for these exams. About 40 to 100 hours, depending on your background in the world of finance. Now, 40 to 100 hours of self-study of a 628-page text is required. This is once again just the average range, right? Depending on background and how your learning style can change. Level 2 takes about 120 hours and level 3 about 140 hours of preparation. And you can see the average pass rates over here as well. Which is also why you will notice if you look at, say, 100 people starting out with the exam, you will see 66 make it to level 2. Of that, 61% will make it to level 3. And of that, three quarters will pass. So it is a tough and highly sought after exam. And it's something that the recruiters of the world, whether it is the large firms like Bloomberg and Bank of America and Morgan Stanley, or whether it is firms working in a regional or even at an independent, at a city level, small firms also require people with a high proficiency in technical analysis. Now, what you as students should thank your faculty members and professors for is that they have signed with the CMT Association what is known as the Academic Partner Program MOU. And as a result of that, you as students get access to scholarships that are not available to most of the, let's say, the financial services industry professionals. So just so you know, for those of you who wish to take the levels 1 and 2 exams, there is a scholarship whereby, so you can obviously take a look at this table. Some of you, I'm sure the smarter ones among you, are taking a quick screenshot of this as well. But this is applicable for students of graduate courses. So that once you've completed your undergrad degree and are doing some kind of a master's or postgrad program, then you have access to scholarships with both the level 1 and the level 2 exam. In addition, the curriculum, the text of this subject matter is provided by Wiley, and they also provide an additional discount of close to $150 on the standard rack rate. So this is just so you know, and you need to thank your faculty members, especially Professor Shagato, who has been in touch with us consistently in order to ensure that IEM is part of our academic partner program. But you need to ask yourself the question: why has your institute taken so much interest in becoming part of the academic partner program, and what are the career opportunities here? Now, the important thing to understand with career opportunities and the CMT program is one can learn technical analysis anywhere. But what we want to see is whether A, investment performance, and B, career opportunities are improved by becoming a CMT charter holder. So we do this very regular activity called a jobs analysis to understand A, what are the needs of the industry, what are the current trends which should be incorporated into the curriculum, and B, what are the benefits that market participants are getting by being CMT charter holders. So the infographic that you can see on the right-hand side tells you one part of that story. We find that about a little over 40% of the people who become CMT charter holders say that they got a promotion because of their CMT charter. In fact, it's a very funny thing. I was in London for a conference, and I had a lot of people walk up to me and ask about the CMT program. What we found was very interesting was that of these people walking up, a lot of people happened to come from Vietnam. And when the 6th or 7th person came to us and asked about the program, we asked them, what is so special, what's happening in Vietnam that everyone is interested in the CMT program? And we found that across the financial markets in Vietnam, most firms have made it a requirement to have cleared at least level 2 of the CMT program just to be eligible for promotions. So this is something that the markets, the financial services industry is starting to take on much more seriously. More than half the people who get a CMT charter also find that they are able to apply for and get into newer positions. They get more responsibilities. About a third say that they get contacted by external employers simply because they have a CMT charter. And then, of course, there is an increase in salary, which about just under half the people tell us. So these are some of the benefits that market participants see in finding in acquiring a CMT charter. But the bigger and the more important question is why does that happen? It happens primarily because of the core domains of knowledge that people learn from the CMT program. One of those, and the primary one that I'm going to talk about today, is risk management. But the development of risk management, quantitative systems, portfolio management, and the applications of behavioral finance are the four broad areas which currently the industry requires from its professionals, especially from professionals who, like I said, are front office, which means they're either facing the markets or facing clients and talking about the markets. The ability to understand risk. So with that in mind, let me spend some time talking about the industry as a whole through what I call the story of risk. Now, the story of risk is something that you need to understand. And I would love if this part of the session can be a little interactive. Let's see if, let me just open up the chat window here. So I can see that all of you are very prompt on chat when Professor Shagato said that your certificate depends on your response on the chat. So for those of you who would like to kind of interact, feel free to use the chat platform. But let me start by telling the story. The story is of a ship sailing on the sea. And the ship is leaving from Australia, from an exporter of coal, and is sailing to India. Let's say this ship belongs to Adani Power. And as the ship is sailing from Australia to India, to the Adani port in Mundra, it encounters a storm. Now, if it encounters a storm and is trying to reach India, what are the things that the company, that Adani Power, worries about? Now, I would love for you to type your answers on the chat window. What do you think are the risks that the company is facing if it encounters a storm? Let me I be more specific. It is not necessarily caught in the storm and is likely to drown, but say by their monitoring of the weather patterns, etc., they see that a storm is developing somewhere in the Indian Ocean as the ship is leaving from the port. What are the risks that the company is facing? I'll wait for a few seconds for the brighter among you to type your thoughts. What do you think are the risks that the company is facing? And what should they be protecting themselves against? The ship may sink, you may lose. So there is a physical risk, that is the threat of the ship itself sinking. And as protection against that, there is insurance. Shivam, that's a good point. What else? What other risks exist? Threat to employees, because in all likelihood, so typically the ship that is sailing will not probably be owned by the Adanis, but it must be contracted by some company. Goods could get damaged, employees could be under threat. And if something like that happens, if the ship sinks, not only will they lose their goods, they might also lose reputation. There's a reputational risk as well, right? Amisha, I'll come to your question about enrolling for the CMT program in a bit. We have some time for Q&A. But I want to, okay, let me narrow now when it comes to the conversation around risk, a little more specific. Let's say the storm is not likely to hit the ship. So the ship is not likely to sink. But if the ship waits for a while, the storm might pass from in front of them. But maybe nowadays with global warming, weather patterns are changing. Maybe it's a large storm. Let us assume that while the ship is not at risk, the ship will get delayed by 1 month, right? So if the ship is getting delayed by 1 month, what are the risks that the company sees? Garvita, you said employees, you mentioned goods as well. Krishnandu, you also mentioned goods. Swati, The ship may sink, everything gets lost. Shivam said to that there is a decline in sale, untimely delivery, so there's a logistical risk. Uh, okay, no profit, maybe, maybe not. Now, let's say Adani Power is getting this coal so that they can use it in their coal plants. There could be a logistical or production issue. Let's narrow the story. Time risk, very nice. They might not be able to deliver, the ship might not be able to deliver the coal on time. As a result, the plant itself, the power plant might suffer, or it might have to go elsewhere and buy coal. India also produces coal, but not as high quality as Australia. So maybe there might be some compromises there as well. But let's make it even more specific. The finance department of production may shut down. That is also possible, but not likely because there are other sources from where you can acquire coal as well. In fact, in and around West Bengal, Bihar, there's a very large coal belt, but there might be a risk to quality. But if we come to the financial risks, the Treasury Department of Adani, what financial risks would they be worried about? Now remember, the ship is carrying coal and is sailing from Australia to India. These are your hints. So we're looking here at the Treasury Department, and I've given you some hints here in this little infographic as well. The Treasury Department of Adani is worried about some risks. What are those risks? The cost of transportation is built into this, but there are some more specific risks I'm looking for. Budgeting problem comes under financial risk, but what specific kind of risk? What do you mean by budgeting or financial risk? To be more specific, they bought coal, remember, and the price of coal constantly changes. How much is the price of petrol these days, and how much has it been changing over time? If there's a delay of a month, would the price that they purchased the coal in be the same as the price that they received the coal? What if the price changes and becomes much higher? What if the price changes and drops? That is the price of coal. What about the exchange rate, the currency exchange rate? And if any of you have been monitoring the USD versus the INR, the US dollar versus the Indian rupee, you will have seen, I mean, I don't know if you remember, 10 years ago, the USD INR was 44 rupees. Today, it's almost kissed 78 and come back to around 73, 74 at this point. So these things also change. There have been times when the price of oil, if you guys remember, just a few months ago, dropped so drastically and so suddenly that within the period of a week, it went from a positive number to even a negative number. How that happened is a whole other story, but these prices can fluctuate. But the job of Adani Power is not to take these price risks. Their job is to take the risk of creating value and producing electricity and hoping that the electricity sells in the market. That is the risk that they're in. The price of raw materials changing is not the risk that they want. So they try to protect themselves against this risk by doing something called, for those of you who are doing something in finance, you will remember the word hedging. What they do is they try to reach out to a bank, to banks, multiple banks that they know, and ask their banks to provide some kind of a financial hedge to the price of the USD INR, to the price of oil, to the price of coal, or whatever other commodities they are concerned about the price fluctuations in. Commodity price risk, Swati, that's correct. So commodity is one, currency is another, and in a separate context, we look at the other ones as well, right? So they reach out to the bank, and then in the real life scenario, they'll reach out to a panel of 10 or 15 banks, but we'll not go down to that workflow, right? But they reach out to a bank, and then they say to the bank, give us some kind of a financial instrument that will help us protect against the risk. The kind of instruments that the bank can provide are futures. This is especially when they're trying to protect against time risk. They can provide something called futures, something called forwards, something called options, something called swaps. Now, to understand what the price of any of these contracts should be, as in what price should the bank quote to the company, they will also run some calculations and try to understand what are the trends in each of these, whether it's commodities or currencies or any other instrument. What are the trends right now? Where is it likely to go? And on the basis of that, they will have some formula, some model of theirs, using which they will say, okay, whatever the price is right now, plus maybe there's a risk that the price increases by 10 rupees for some reason. So they will say, okay, the risk is that the price will increase by about 10 rupees. So we will charge you, say, 12 rupees. So they decide their pricing based on some model, right? And so what happens is when this trade happens, the risk passes from Adani Power to their bank. Now, it is not the job of the bank to take a risk. So, what does the bank do? It buys risk from companies like Adani, like Reliance, like all these other companies that reach out to them to mitigate risk. And they do something that's a process is called securitization. They convert those risks into securities. They either do that by themselves or they reach out to brokers and they work with them to create securities out of this risk. And so then these brokers, they work with the broker who then reaches out to an investment management house. Now, this investment management house can be a hedge fund, it can be a mutual fund, it can be an insurance company, it could be, let's say, what did I cover? Hedge funds, mutual funds, insurance funds, pension funds, all these large fund houses where money is collected and then managed in the financial markets. So the brokers or the financial market intermediaries will reach out to these fund houses. Now, these fund houses are in the business of taking risk in the anticipation of a return. So what you noticed is that the risk flowed from something real, that is a ship in a sea waiting for a storm, to the company's financial books, from there to the bank, from there to the intermediary, from there to the investment management companies who are the ones who are trying to take a risk. That is one kind of risk. The other kind of risk, which, like I told you, Adani is in the business of taking, is to grow and create more and more power plants and to sell power to the people. And for that, they need money. In order to raise money, they typically go to, they do it in multiple ways. They can either do it by raising debt or they can do it by raising equity. So equity funding. So that means if they want to sell shares of the company, they reach out to a financial market intermediary again. This typically is an investment bank. Again, comes in the category of brokers, but these are called primary market brokers. So Adani might reach out to a broker and might say to the broker, hang on, let me just take this chat out of here. And they might say to the broker that, hey, here's the risk that this is the amount of money that I want to raise. So can you please help me raise the money, right? So what will then happen is that the broker will reach out, will try to get the optimal price of the stock. They will try to decide what the price should be. And on the basis of that, they will reach out either to other investment management companies and try to place that stock in what is called a primary placement, or they will engage with exchanges, and through exchanges, retail participants like you and I can buy the stock. We cannot buy it directly, so we buy it through what is called retail brokers. And finally, the retail market participant can actually buy shares of Adani Power through a broker. And this is how shares from a company reach us as the retail investor. Now you notice that I've showed you two kinds of asset management companies. The one in the center in black and the one up on top in red. Now both of these also, they raise money by managing risk on behalf of market participants. And they have other intermediaries or sales organizations that also reach out to the bottom corner, to the end investor, to raise money in various different ways. So what you are looking at right now is the way risk is transferred from one organization to another, and eventually even to people like us. But the organizations, that is the investment management companies and investors like us, are the people who actually want to take risk in the hope of return. And the other organizations try to mitigate their risk in some way or the other. But in order to manage risk or in order to take risk, you need to understand what your risks are. And that is where technical analysis comes in. So what I've tried to show you through this story of risk is what are the kind of industries in which facing the market and trying to understand which direction the trends are, which direction is the market going, you cannot predict what is going to happen, but what is likely to happen if this pattern continues? And if this pattern changes, in what ways can I protect myself is what necessarily a technical analyst looks for in various different kinds of roles. So previously, if people would ask me what kind of jobs are available, what kind of careers are available in technical analysis, I would say it is the role of a technical analyst. But now, as the industry has gotten more and more sophisticated, and it has come to understand more and more where risk needs to be managed. This story has changed. And now people are seeing technical analysis in careers across all industries. So let me give you some examples. I mentioned corporations like Adani, like Reliance, like ITC, like all major corporations that do any kind of business, need to raise any kind of money. They need to monitor the markets, especially the publicly traded markets where technical analysis is most relevant, to understand what are their risks, whether it is commodities, whether it is FX, whether it is fixed income, whether it is equities. And hopefully, as part of your course as well, you'll understand what kind of careers, etc., are there as well. So, corporations, and within all these, there are five kinds of roles I've identified. And these are not, like I mentioned, the entire gamut of roles where technical analysis is relevant, but the role of the analyst, the role of the trader or dealer. Now, this could be someone who's engaging with trading their own capital on the markets or dealing with clients in some way or the other. The role of the portfolio manager or the risk manager, the role of the strategist. Once again, technical analysis does not apply only to very short terms to see, okay, where will the stock price go in one day or from one day to the next or 1 week to the next or 1 month to the next. Technical analysis is used by strategists and economists even to measure multi-year and multi-decade, multi-generational trends as well. And that is something that you will learn a lot from Shumoy as you kind of continue to engage with him. But so you have strategy roles as well that use technical analysis. And that is why more and more we are finding now that even CXOs of organizations, CFOs, CEOs, CIOs, all and the department heads of equities and fixed income and FX all use technical analysis in various different ways. While a short-term trader and analyst might have a very narrow window of anything from a few minutes to 1 day to 1 year, leadership has long, long horizons of where technical analysis can be used. So all these rules, and in fact, even the boxes that are empty, they are just empty because I really did not find the time to fill these up. But these are the traditional career paths where technical analysis becomes extremely relevant. Then, like I mentioned, but I don't have a slide for this, the modern careers. The careers in the area of quantitative finance, in the areas of algorithmic trading, in the areas of system development. So now you don't find only the people who like to engage and analyze the markets, but people who are building systems for this also need to understand technical analysis so that you understand what are the mathematical rules that you can shape as code into some kind of quantitative system or the other. Right? So hopefully I've been able to give you a very wide sweeping glance of the industry, and from there the ability to understand what kind of careers technical analysis can be relevant for. Right? This is a good point for you guys to ask questions, but if if I get a lot of questions like this around what are the ways in which you can stay engaged with the CMT Association as academic partner program students. You guys are, like I said, this is a very well-timed thing because just in the next couple of weeks, we'll be starting with an investment challenge. This challenge we will announce and we'll be reaching out to your schools and engaging with them to kind of invite registrations starting this next week. The competition itself, the investment challenge itself, will be based on technical analysis. We'll provide for you some basic videos and some basic learning content for those of you who have no background in technicals. And we do encourage you to participate and learn these tools and use these tools on the real markets, but with paper money for 2 months in order to actually get a feel for what technical analysis is, how can you engage with the markets, and how can you learn more about it. So that is the investment challenge. That's something that we are doing. For those of you, there was a question about how to register for the program. Now, specifically for full-time students of academic partner program institutions like IEM Kolkata, what you need to do is to reach out to your professors and convey to them that you are interested in appearing for the CMT Level 1 exam. The exams happen twice a year, in June and in December. So then the upcoming exams are in June. And the exams will happen from June 3rd to 13th. And the level 3 exam, not relevant to you guys, will happen on the 10th of June. The levels 1 and 2 are multiple choice questions through and through. Level 3 is half multiple choice and half short answers. Right? So for you guys, obviously level 1 is relevant right now. The other way that you can stay engaged with us and with the technical analysis community is through our server on Discord. So for those of you who are avid gamers, you probably know about Discord already. If you don't, it's basically a communication platform that we've created. And you can all join this platform by using the link that I've given there. That is go.cmtassociation.org/discord. So what you will see over there is just the technical analyst community of India. And this is a very new platform, so people are still joining. And you will see over the next couple of weeks, this community is growing quite quickly. But this is a space that we've created where students like you, where market enthusiasts, and anyone who wants to understand and participate in the dialogue around technical analysis can actually do so from here, right? So I'd invite all of you to be part of the community as well and stay engaged with us. Sumoy is also a very active member. He's one of our CMT Association volunteer leaders, a CMT charter holder, and a very active volunteer who, in fact, puts up helps to put up some of our best domestic and international events as well, right? So that is a quick and dirty about how you can stay engaged with us. Garvita, to your question, the Discord link is right above the screenshot of the Discord platform. Let me just highlight this for you. Highlighter, and I hope you're able to see this. go.cmtassociation.org/discord, right? So that's really all that I have to say at this point. And be happy to take questions. Professor Shogato, if you'd like to relay the questions, or if you guys want to ask your questions on chat, Shumoy and I are both available to answer them, whether it's about technical analysis itself, about careers, or about the CMT Association. So on that note, thank you very much.
Thank you, Joel. This is a very good presentation from your sides. And students, if you want any kind of questions, you can ask them, or you can write down in the chat box.
I always find that if there are no questions, it means one of only two things, right? Okay.
Okay.
So, Garvita, to your question about how the course itself is conducted, the CMT program itself is a self-study course, but Sumoy is working with Professor Shogato and will plan kind of a series of sessions which will help you, along with your self-study, to be able to understand technical analysis in a little more depth, to be able to understand and kind of wrap your minds around the curriculum. Typically, around the world, people take this as a self-study course, and more than, I think, some 18 or 19,000 people around the world have been part of the CMT program. I hope that answers your question, Garvita. So it is an online self-study course to the extent that the curriculum that you purchase from Wiley, these are real books, there's not a background, will be a book like this. So I just want to show you the edge as well. You'll be purchasing the 2021 curriculum. This you can study by yourself. In addition to that, in fact, a company called Optima partners with us to provide to all our candidates free access to their charting platform for all CMT program candidates. So once you sign up for the program, you get free access to the Optima platform. Like if I remember correctly, you had seen in the table that I had shown you just a moment. Just a moment. Oopsie. Yeah. Yeah, so the Optima charting platform, and Optima also provides its level 1 course for free to all students. So that also is an option for you. I'm glad you're very interested in the course. It's very nice to know. I think someone else also had a question about the program. Amisha, yeah. To enroll for the course, like I mentioned, what you need to do is that we will be in touch with Professor Shogato, and you need to submit your names to him. You also need to create a login on the CMT Association website. And so Professor Shogato will then pass to us the list of students who are interested in taking the exam, along with the CMT member IDs. That is a number that you will get once you create your login. And once we have those, my team from New York will send out to you a link where you will have to pay basically your scholarship, your post scholarship fee. And once that is done, your registration will be complete. You will also be able to access member benefits like we have various publications, newsletters, magazines, and there's a very, very rich archive of videos that we have from the last 40 years of our existence, 50 years of our existence, and 40 years of having conducted annual symposiums and annual events. So there is a very rich body of knowledge. For instance, the inventors of all the major studies in technical analysis will have described their, so for instance, Bollinger Bands is a study that you will study about. And John Bollinger, who invented Bollinger Bands, talks about Bollinger Bands in one of our events, which is also available in our video archives. How will this course support you in your MBA degree? I don't know, Garvita. This will support you in your career if you want to make a career in the financial markets, right? I'm not taking anything away from your MBA program, but okay, let's look at it this way. Right now, you study courses like, you might probably have courses like trading strategies. You definitely have something called security analysis, portfolio management, where you learn a lot of what Shumai called fundamental analysis. Technical analysis is a complementary body of knowledge. And in the industry, our experience has been that people use fundamental analysis and technical analysis hand in hand, say about 50-50. But typically in academia, we find that technical analysis is usually 5 to 10% of the course. So what the CMT program will help you to do is to kind of balance out your body of knowledge. If you are looking specifically, I must clarify, for front office roles, that is decision-making roles in the financial services industry. If you're looking to work in marketing for Procter & Gamble, perhaps the skill set, yeah, the skill set of technical analysis will still be useful if you choose to invest by yourself, if you choose to, manage your own portfolio at any point in time. The learnings of technical analysis will still be useful for you. So it's both a personal skill in that sense and a professional skill. But I hope I've answered your question. This will help to complement everything that you're learning in your MBA degree as well. There is no comparison between the CMT program and the NISM program. In fact, NISM is looking to collaborate with us to create a course on technical analysis as well. Right now, they don't have enough of a rich course in technical analysis for market participants. Let's see, what you can compare the CMT program to is the CFA program, but focusing specifically on technical analysis. So CFA focuses on fundamental analysis and CMT focuses on technical analysis. So that's something that might help you. We still have some time, so I can just sit here and look at the camera if you want. If not, Professor Gota, I'll leave it to you.
Okay, Joel, thank you. Thank you for your giving us your valuable time. And Shumai also. If anyone students who have any queries or anything, please.
Oh yes, Swati, to your question, yes. This is entirely, not just overall, technical analysis. Sunajit, if you weren't looking at the slide that I had up for such a long time, then the course fee is, so we don't have a course fee as such, but the exam fee for level 1 is $130 for full-time students of academic partner program institutions like yours, right? That's for level 1. And if you are doing a postgraduate course, level 1 and level 2, you can apply for this as scholarship. Ordinarily, the standard fee is about $800. But like I said, for academic partner schools, after the scholarship, it's $130. Namrata, your question is, which would be a more worthwhile certification, CFA, CFP, CMT, or NISM? The answer to that question depends on what you want to do in your career. So depending on the role, CFP is a financial accounting kind of role. So if you want to be in the mid to back office, captive treasury kind of roles, that might be important to you. CFA is more broad based, so it covers like a bit of everything. CMT focuses specifically on front office roles. So, like I said, if you are going to face the markets as an analyst, as a trader, as a dealer, as a portfolio manager, or if you need for strategy reasons to analyze the markets, or you are a quant or algo person, then then CMT is relevant to you. Um, NISM is just a licensing. It's not so much. So the NISM program is just a statutory requirement that you have for taking the course. It's a fairly simple course, and so the bulk of all the anyone who needs to be certified a research analyst does all anyways take that course. The CFA, CMT, CFP belong to a global charter, global credential, and NISM obviously is relevant to India, right? So I don't want to take away, like I said, NISM is working with us to create a course on technical analysis as well, and that will be relevant to all these industry types and job types that I described to you so far, right? So which is more worthwhile? You have to ask yourself that question. The question is, what career do you want? And on the basis of that, you will decide which qualification is more worthwhile. Like I said, I can kill another 9 minutes. I still have time. Uh, I wonder often, Professor Shagato, if students are more shy on Zoom or in person. You know.
Actually, there is some reason behind it. But we also the conduct the one the offline when the all the class it should be stable, and the college will open and all the students will come. We also conducted the offline program. I think I have also talked to Shumai and you also in telephone.
Absolutely, absolutely. And I am looking forward to coming back to
Actually,
Kolkata
yes,
sometime
there's an
soon.
online lot of things the student have some lot of queries, but
Right.
maybe they still doesn't ask over there.
No, it's perfectly fine. I do understand. Of course, unfortunately, the world we're in right now, one really can't say when it will actually open up and when we'll be able to meet in person. But just by way of background, I should tell you, I used to manage Bloomberg's Kolkata business as well. So I used to visit Kolkata between 2010 and 2017 at least once every 6 weeks. And so, and I mean, I travel primarily to eat, and then work is a secondary kind of offshoot of that. So I have like a list of favorite places in Kolkata where I go to have specific things, like rasgullas at Chittaranjan and nowhere else. You know? So yeah, I mean, like that's how devoted I am to all this. To my kind of memories of Calcutta. So I do hope I can make it to campus as well sometime.
Yes, yes.
It's funny that we weren't able to cross paths during my time at Bloomberg. So yeah, for the students, by way of background, I used to work with Bloomberg between 2010 and 2017. I used to run the education business, which is the sale of the Bloomberg terminals to business schools and universities. So let
I
me put it this
know.
way.
I'm using the Bloomberg last 10 years.
Oh, you have? Wonderful, wonderful.
Yeah.
Where have you been using it? At IIM Capital?
Actually, in Priyank Commodities.
Oh, nice, nice.
Yes,
Wonderful, yeah.
yes, one of the your colleagues, I think,
Uh-huh.
is basically from Asansol. His name is Punit Desai and God of Gupta also.
Right, right.
Okay,
I
basically.
can see another question, Shagata.
Yes, yes.
I think this question is for you about payment assistance being provided by the university.
Which
So the Surajit's question is, will payment assistance be provided by the university, like submitting the fees? So yeah, just for your benefit, the submission of the exam fees to the CMT association can happen two ways. That depends on the institute. Either the institute can collect the fees from the students and then remit it all to us in one go, or you can just give us the list and then one of my colleagues will reach out to the students. But then the payment can be made only via international credit card or wire transfer. So for the students who are making payments directly, you'll have to have an international credit card, and we'll be sending a credit card authorization form which needs to be filled out. Yeah. So, Surajit, to your question, it depends on the institute. If the institute is happy to collect the payment from all the students and then remit it to us in one block, we can accommodate that as well. Or we can engage with each student directly.
কিছু না ওদের ওই সিএমটি वाला
होगा
Yeah, if you don't have a credit card, the other option is a wire transfer. But you should know that banks charge a $25 fee for wire transfers. Right, so that's an additional thing to keep in mind. Great, then I think there are no more questions. So, Professor Nanda, thank you so much for your time.
Thank you, thank you, Joel. I hope this lovely session has been rolled out, and thank you, Shohardo. Professor Shohardo Nandi has given a lot of support for us, and thank you all the students to join these events and make it successful. Thank you, Shumaya.
Thank you.
Okay,
Sure.
Joel, thank you once again. Okay, we'll meet you soon.
Sure. Thank you so much.
Okay.
Thank you to the students. Bye-bye.
So, okay, bye. Now we leave the meetings. Okay, the close end. Thank you, students.